If you think Sydney's property market has peaked, you're not alone. But what if I told you Brisbane just posted a 10.2% price surge in the last 12 months, and savvy investors are calling it Australia's last great buying opportunity? Here's a question I've been asking my clients in London and LA. Would you rather spend $1.6 million in Sydney for modest gains, or half that in Brisbane for double the growth and higher rental yields? Take a look at this comparison. Brisbane versus Sydney median house prices, 2025. And get this, investors who jumped into Brisbane's Murrumba Downs in early 2024 are sitting on 18% capital growth in just a year. That's not speculation. That's a data-backed return most of us only dream about. In this video, I'll break down Brisbane's top suburbs for 2025, reveal where the real money is flowing, and give you actionable strategies to capitalize before the rest of the world catches on. So, if you're serious about securing the next big thing in real estate, stay with me. Why Brisbane is on every smart investor's radar? I've spoken with investors from London to Los Angeles, and they all ask the same question. Why Brisbane? Why not Melbourne or Sydney? Here's the answer. Brisbane is currently delivering the kind of growth Sydney offered back in 2010, but at a fraction of the cost. And unlike Melbourne, Brisbane's fundamentals are rock solid. Interstate migration is at record highs. The 2032 Olympics are pouring billions into infrastructure, and rental yields are outperforming Australia's traditional investment hubs. Take a look at this migration trend. Net interstate migration to Queensland, 2015 to 2025. Now compare that with Sydney's current affordability issues. A two-bedroom unit in Sydney's inner west will set you back $1.3 million, often yielding less than 3%. In contrast, a similar property in Brisbane's Paddington, priced around $1.9 million, offers a 5% yield and significantly stronger capital growth potential. That's why high-net-worth investors from the US, UK, and Canada are shifting their focus north. One of my clients from Toronto put it this way: Brisbane feels like Vancouver before the tech boom, except this time you can see it coming. Brisbane's economic and demographic surge. Let's break it down. Brisbane's population is growing at 2.2% annually, absorbing much of Queensland's interstate migration. Families are relocating for lifestyle, affordability, and job opportunities in industries like healthcare, education, and construction. And here's where it gets interesting. The 2032 Olympics are accelerating urban renewal in key suburbs like Wollongabba, Auchenflower, and East Brisbane. Billions are being invested in transport projects like the Cross River Rail and the Brisbane Metro, shaving commute times and boosting the livability of these neighborhoods. Check this out. Brisbane Infrastructure Investment Pipeline, 2024 to 2032. You don't need to be a genius to see where this is going. Properties within 2 kilometers of major infrastructure projects historically outperform other areas by 15 to 20% over a 5-year horizon. That's a trend we saw in London with the Crossrail and in New York with the Hudson Yards redevelopment. Mortgage rates and financing insights for 2025. Let's talk about the elephant in the room: rates. Right now, Australia's cash rate is sitting at 4.35%, and variable home loan rates hover around 6.5%. But banks like ANZ are forecasting a 25 basis point cut by mid-2025. What does this mean for you? If you're leveraging debt, and let's face it, most smart investors are, this shift can dramatically improve your cash flow. On a $1 million loan, even a 0.5% reduction could save you $500 per month. Over a year, that's $6,000 back in your pocket, or redirected to your next deal. Take a look at this breakdown. Projected mortgage repayments, 2024 versus 2025, based on ANZ forecasts. And if you're coming from the US or UK, Australia's stable political environment, no vacancy tax in Queensland, and simplified foreign buyer rules make Brisbane one of the least complicated places to park capital in 2025. the best suburbs in Brisbane for high net worth investors. Now let's get specific. I'm going to give you 3 suburbs that high net worth investors are targeting right now, and why. Paddington. The prestige play. Paddington is Brisbane's answer to Sydney's Surrey Hills or London's Notting Hill. It's got charm, character homes, and high demand from both renters and owner-occupiers. Median house price, $1.9 million. Rental yields, 5%. That's $1,800 a week in rental income. Annual capital growth, 9.7% in the last 12 months. I recently spoke with Emma, a fund manager from New York, who bought a Paddington terrace last year. She's already fielding offers 15% above her purchase price, and she's not even selling yet. Take a look at this chart. Paddington suburb growth rates, 2020 to 2025. Murrumba Downs, affordable scale with high returns. Murrumba Downs is what I call a quiet achiever. It's in Brisbane's northern growth corridor, close to the Moreton Connector, and benefits from ongoing infrastructure upgrades. Median house price, $755,000. Rental yields, 5.1%. Capital growth, 18% in the last year alone. Lisa, an investor from Sydney I've worked with, picked up a property here for $600,000 in 2024. 12 months later, it's worth $755,000, and her tenant's paying $650 a week, giving her a 5.1% gross yield. The kicker? She's looking to leverage that equity into a second property in Auchenflower without tipping in extra cash. Auchenflower, the Olympic upside. Auchenflower is one of the suburbs set to benefit directly from Brisbane's Olympic infrastructure boom. Proximity to venues, new transport links, and gentrification are pushing prices north. Median house price, $1.3 million. Rental yields, 5%. Projected growth. Analysts at Ironfish predict 7% annual growth leading up to the Olympics. If you missed out on London's Stratford regeneration before the 2012 Games, Auchenflower is your second chance. Just like Stratford, prices here are moving fast, but still have room to run. Take a look. Auchenflower property. Value projections, 2024 to 2032. Opportunities versus risks, what you need to know. Now, I'm not going to sugarcoat it. Every market has its risks. Interest rates could spike again if inflation flares up. Migration patterns could slow if economic conditions change. Supply risks are real, with over 11,000 new units expected by 2027 in Greater Brisbane. But here's the thing, deep pockets can ride out volatility, and often, volatility creates opportunity. As David Lynn, a developer I met in Melbourne last month, said, "If you're cashed up and patient, this cycle is your playground." Take a look at this data on supply risk. Brisbane new dwelling completions, 2024 to 2027 forecast. Government policies making Brisbane attractive. Another reason Brisbane's heating up is policy. Queensland has reduced foreign buyer surcharges to 7%, far less than places like Vancouver or even London's stamp duty premiums. There's also no vacancy tax, which makes holding property easier. And if you're buying under a company structure or trust, the tax planning opportunities are far more flexible compared to US and UK regulations. Case study, Lisa's strategic play. Let me take you back to Lisa. She's not just a lucky investor, she's strategic. In 2023, she bought in Murrumba Downs, rode the capital growth wave, and now she's reinvesting in Auchenflower. Her total outlay across both deals, $1.3 million. Projected rental income, over $80,000 annually. Capital growth potential, easily 15 to 20% over the next 3 years. I asked her recently why Brisbane, and her answer was simple. It's the one city in Australia where the numbers still make sense. Actionable strategies for investors in 2025. Here's how you can act on this. Target Paddington for blue-chip, long-term holds. Buy now, rent at premium yields, and expect consistent growth. Use Murrumba Downs as a cash flow play. enter at a lower price point, bank high yields, and roll that equity into future deals. Bet on Auchenflower before the Olympic rush. Time your exit around 2032 for maximum upside. Lock in fixed rates now while lenders are still offering sub 6% terms. That stability is worth its weight in gold. And remember, time in the market always beats timing the market. But right now, Brisbane offers a rare chance to do both. Maximizing returns, timing, and strategy matter. Here's what I tell every client I work with, from Vancouver to New York. Timing and strategy are everything. And Brisbane's timing, it's now. We've seen it before. In London, investors who moved early into Stratford before the 2012 Olympics saw property values double within 5 years. In New York, Hudson Yards transformed from a no-go zone into one of the city's hottest addresses. What's happening in Brisbane feels eerily similar, except the numbers here are still accessible. Let's put it plainly. Whether you're managing a portfolio from Melbourne or you're sitting in a high-rise office in Chicago weighing your next offshore move, Brisbane offers the trifecta: affordable entry points, high rental yields, and huge infrastructure-driven upside. And check this out. Capital growth in Olympic-adjacent suburbs, London 2012 versus projected Brisbane 2032. Key takeaways you can't ignore. Before we wrap, let me recap the 3 core insights you should walk away with today, because these are the things serious investors will act on. First, Paddington offers blue-chip stability and prestige. It's Brisbane's Notting Hill, perfect for those who want steady capital growth and premium tenants. Second, Murrumba Downs delivers affordability and scale. If you're after cash flow and rapid equity building, this is the suburb where numbers work overtime for you. And third, Auchenflower is the Olympic sleeper hit. With billions funneling into nearby infrastructure, early investors stand to reap serious capital appreciation before the world arrives in 2032. Here's a snapshot to help you visualize the differences. Brisbane Investment Suburb Comparison. Paddington, Murrumba Downs, Auchenflower, 2024 data. What you should do next. So what's your next move? If you're a high net worth investor who wants in before prices get out of reach, now is the time to act. The smart money is already here. The question is, will you be ahead of the curve or watching from the sidelines in 3 years wishing you'd made a move? And I get it. This isn't just numbers on a spreadsheet. It's about securing long-term wealth. That's why I work with investors like Lisa, Emma, and David who make decisions based on data but act with foresight. Here's my suggestion. Start researching Paddington listings this week. Run cash flow scenarios on Murrumba Downs deals. Talk to your mortgage broker about locking in a sub 6% rate. These are actions you can take right now, not next quarter. Now, engage with the EstateScope community. But let's make this a conversation. Which suburb do you think has the biggest upside? Are you all in on Paddington's prestige? Do you prefer Murrumba's growth play, or is Auchenflower's Olympic factor just too good to ignore? Drop your thoughts in the comments. I read every single one. And hey, if you've got a different strategy or city you're looking at, share it. This channel isn't just me talking. It's about building a community of sharp, data-driven investors. Final call to action with FOMO effect. And if you found this video valuable, and I hope you did, hit that like button. It tells YouTube this is content worth recommending, and it tells me to keep delivering high-value insights for you. Subscribe to EstateScope so you don't miss our next deep dive. We've got more suburb breakdowns, investment strategies, and expert interviews coming up. And trust me, you don't want to be the last to know when the next hotspot is about to explode. Because in real estate investing, timing isn't just everything. It's the difference between building wealth and watching opportunity slip away. This is EstateScope. I'm glad you stayed with me today. Until next time, invest smart.